It's always a pleasure to be here. And let me, before maybe making a distinction between the developing and developed countries, add to this discussion that has just been going on. When you think about the challenges to the central bank independence, I think that the useful way to think about it is to ask yourself, why are we independent in the first place? It's not been there forever. Some central banks have been independent a bit longer. Some have become independent, basically most of them, over the last 30 years. It's a relatively new phenomenon. And the reason why central banks became independent is not because us as central bankers have fought for it and achieved it, but because of the society realizing that it's good to have a central bank being independent because the costs of not having it were too high. Central banks were monetizing the debt for a long period of time, and that has resulted in a socially costly levels of the inflation, to losses because central banks had to ask the ministers of finance whether they can increase the interest rates. Remember the case of the UK when George Soros shorted the pound, and well, at some point politicians realized, well, this is not good. Maybe we should give central banks the independence. So since then, we do have independence. Now, if we think about the independence today, we should ask ourselves, has anything changed? Do we still need independent central banks? And in that sense, I would say that the recent episode with the high inflation, Paul has said that threatens the central bank independence. But I think it also helps, to some extent, central bank independence. Because for a long period of time, we had a very low inflation. And although people have not maybe talked about it very openly, many of them that I discussed over that period of time were implicitly calling into a question whether we still need independent central bank, which was set up there to keep the inflation low, when the inflation was actually lower, and the central banks were printing a lot of money trying to bring it up. So I had a feeling that more and more people have started to think there is a free lunch in, printing money, monetizing public debts again, and have started to question the main concept why the central banks became independent. Now, with this boot of inflation, things have kind of came back to where we were when the central banks were granted the independence. So it might have not been that bad for thinking about central bank independence and for realizing why the central banks need to be independent. Also, important aspect of that is, and that has been mentioned, is also supervision. As Gilles has said, most of the central banks these days are also taxed with the supervision. Supervision is extremely important thing. Very sensitive, as you said. You run many risks, but somebody has to do it. And I think it's good that the society thinks that the central bank is the place where it should be done, because it basically conveys trust to the institution to do it properly. In European case, we have the common supervision now, and there are reasons why we have decided to do that. But don't forget that maybe the major threats to the central bank independence in many, if not most of the cases, have come from the supervision side. When you had banks failing, when you had a banking crisis, rather than monetary policy itself, and we should always keep that in mind. When it comes to a question about the developed versus the less developed countries, I think clearly it is easier to be a central banker in the developed countries for different reasons. One is that you're operating in a more stable macro environment. When you're in most of the emerging market economies, basically you're talking about the small open economies. However large in terms of GDP they are, they basically operate as small open economies in terms of exposure to the capital flows, to the possibility of the exchange rate instability, much more prone to any kind of the external shocks, which is particularly clear during the periods of stress, crisis, like the GFC, like the COVID. And for the central banks, it's much more difficult to operate in these circumstances. As Anita has said, twice they lost 15% of their reserves very, very quickly. And that's the nature of monetary policy in this type of the economies. It's more difficult from that perspective. It's also more difficult because often you don't have the legal framework of which you have been talking about, which is strong enough to support the central bank independence. We know of many countries in which basically the president or the governor or the prime minister can just sack the governor. It's very difficult to operate in this kind of circumstances. Also, when it comes to the communication, it's always difficult for the central bank to communicate. There is a study which shows now that 40% of the population don't listen to the central bank at all. So they don't hear you. They don't know what are you doing. The rest, 60%, the question is how much they understand when you talk to them. They listen, but they understand a little bit more or less. It's easier to communicate if the financial literacy is higher, which typically it is in the advanced economies, than in a less advanced. And then you have to tailor your language in which you speak to the audience, easier to do in advanced economies than in a less advanced economy. So there are different reasons why I would say it's more challenging to operate in the less advanced economies, but in those economies they often really have to choose a good central banker, exactly because the task is so challenging. Sometimes in the more advanced economies, particularly in the good times, you think it doesn't really matter who the governor is. In the challenging environments, they usually have to take care about who that person is more. Thank you.
Thank you very much, Boris. So more challenges in emerging market economies than in advanced economies. Paul, what is your view on that?
Yes, thank you, Hervé, again. My answer would be maybe a little bit what the economists are always accused of answering, which is a bit yes and no, I would say. And let me expand on that. But first, I think it's interesting to follow the discussion in time. I think during the Great Moderation, which is a period that was already referred to, which ran approximately, depending on how you define it, from the late 1980s to the beginning of the global financial crisis in 2007, 2008, I would say that the focus on central bank independence gradually receded in many advanced economies, and not so much because people were not thinking about it, but it was more or less taken for granted. People just assumed that that was the case, and that also made it, I think, easier. And that, of course, was the result of inflation coming down. And now I'm talking about the advanced economies. Inflation was coming down, interest rates were coming down, and the discussion for that reasons was less outspoken. As a result, I think, and this was what Boris was referring to also just now, I think many central banks focused maybe a bit more on the financial sector issues in as far as they were responsible for oversight, but also on the macroprudential issues. They really came up during that time because it was felt that we should also look just beyond the monetary and also look at the more financial and macroprudential elements. That, of course, changed again after the Great Moderation and the situation that we are in now, where there's much more debate on this issue. And then the question comes up, what does it mean to advance and emerging economies? And there I think I would share what Boris just said, that probably it's a bit more of a challenge in many emerging market economies. And why? I think if you just run down the arguments that I listed in my first, in the answer to the first question, then you can see that, for instance, inflation is generally higher in emerging markets than it is in advanced economies. So that alone already focuses the discussion on the issue more. Also, interest rates, therefore, need to be higher or need to be adjusted more. But also an issue like fiscal dominance is, in many emerging markets, is a big issue. As I mentioned, it's a big issue at the moment in the debate internationally. It's a big issue in many countries, but specifically it's a big issue in many emerging market economies. Fiscal dominance, but also financial dominance that I mentioned, the responsibility of the central bank for the financial sector being vulnerable, maybe being dependent on interest rate policies. That may also create an additional element of financial vulnerability and financial dominance, and that's also maybe a bit stronger in the emerging market economies than in the advanced economies. And lastly, I think election cycles, the impact of the political cycle on the economic cycle, on monetary policy. And election cycles may also be somewhat shorter in some of the emerging market economies, thereby also strengthening that threat to central bank independence. And of course, the whole issue may be newer. The whole issue of central bank independence may be newer and a bit more foreign to some emerging market economies than advanced economies. So, and then the issue, of course, I mean, why did I say yes and no? What is the yes? I think what both groups of countries have in common, of course, is the fact that it is just a very key issue to their effectiveness in terms of operations. In that regard, there is no difference, I think, between emerging and advanced economies. It is as important in advanced economies as it is in emerging market economies. And the reasons and the arguments apply similarly in both groups of countries, which, and there I want to finish with, which is also the reason, I think, why the IMF, why the fund is very much focused on the issue in general. It doesn't see the issue as just an issue of the emerging market economies. It sees it as a general, global, worldwide issue for all central banks in the world to focus on. Thank you, Hervé.
Thank you very much, Paul. And so broad agreement between the two of you on the respective challenges in those kinds of countries. Let's move to a question that will serve as a transition to the second part of the discussion, which is what can be done. I mean, starting from the literature on central bank independence, you have this distinction between de jure independence and de facto independence. So de jure is a lot about the legal framework, for instance. The governor mentioned that as something very important, of course, and de facto independence being, okay, what is the situation in practice? So on de jure independence, I will turn to Paul, who has worked extensively on that. Do you see weak points in de jure independence of central banks? And if so, could you please indicate in which specific area this might be an issue?
Thanks a lot, Hervé. So the first message I'd like to convey on this important point is a reassuring one, in the sense that we see that however troubled the times might be for central bank independence, however contested the concept might have become in certain political and intellectual circles, well, these pressures have not translated into legal developments, legal reforms undermining formal de jure independence. And we've got multiple studies from international organizations, from academics, screening the evolution of central bank institutional design worldwide and showing that overall the levels of de jure independence have not gone down recently, and that at least from a purely legal perspective, central bank independence remains a cornerstone of modern monetary policy, and levels of protection remain high. However, strong legal frameworks are not enough, and weaknesses may appear at a more concrete, at a more factual level. And here, I see a certain number of potential weaknesses. I see a number of potential points of friction which might harm central bank independence on the long term, and I'd like to briefly evoke two which are quite crucial from my perspective. The first one relates to the point I made earlier related to the de facto widening of central bank mandates and the plurality of objectives which central banks are now expected to pursue. And this necessarily implies trade-offs, implies balancing, and implies choices sometimes of a redistributive nature. And this in turn leads to greater contestation and greater politicization of central bank action. So the times where central banks could enjoy a strong capital of inattention, an expression which has already been referred to by the governor, those times are long gone. Central banks have now moved in the spotlight, and their policy programs very often spark lively political discussions and disagreements. And it also often happens that these disagreements, these political disagreements, translate into lawsuits, and that politicization leads to the judicialization of monetary policy and central bank action. You might remember the way the quantitative easing programs of the ECB were challenged both in Germany and at EU level, and how it brought the Eurozone into turmoil. And in those contexts, central banks find themselves hostage of wider political conflicts, and this inevitably harms their reputation, their legitimacy, their independence, and ultimately the efficiency of their action. The second point I'd like to make relates to a crucial dimension of central bank independence, which is increasingly referred to as a source of fragility, and that is financial independence. The idea that central banks should remain in full control of their budget and should enjoy in full autonomy all the financial resources necessary to conduct monetary policy and fulfill their mandate. And there we can see a certain number of risks. The first one is the fact that central banks' balance sheets have significantly expanded over the past few years. Central bank losses constitute a real threat, and in that context, the possibility that certain central banks might need to be recapitalized is real, with the obvious risks that such scenario would entail for their independence, especially in view of the lack of explicit arrangements for such scenario in many jurisdictions. Another trend that we are observing is a certain tendency of the political branches to mobilize central bank profits or central bank reserves to assign them to non-strictly monetary purposes. For example, in 2019, the Slovenian parliament passed a law requiring central bank reserves to fund a compensation scheme for shareholders who had been illegally deprived of their assets during the financial crisis. The law was ultimately found illegal by the European Court of Justice, but it's an instance of how political branches might try to mobilize part of the central bank's financial resources and to allocate them to non-strictly monetary purposes. Another example, very recently in Switzerland, the idea is floating that parts of the Swiss National Bank's profits might be used to refund the Swiss pension system. Another example of how financial resources of central banks are under pressure by political branches and under risk of being diverted to non-monetary purposes. I'll stop here. Thanks a lot.
Thank you very much, Paul. So no general weakening of the euro independence, but a number of challenges in the offing. So let's move now to so what can be done to address those threats to central bank independence. And this is a question I will ask to all panelists. What is it that the central banks themselves can do in a way to make central bank independence better accepted by the population? And a number of speakers have mentioned already that when it came in the 1970s and subsequently, there was this idea that more independence would come with more accountability, more transparency. So is there something that central banks can do in that area? Let me start with you, Paul.
Yes, thank you. Definitely, I think these are very important concepts that need to go together, the independence and the accountability and transparency. I think they're really key to combine these two. I think it came to the forefront, this discussion, also after the global financial crisis in 2007, 2008. And I think central banks have great powers, and they should be aware of that, and they should also see that as a responsibility to be held accountable and also to be transparent in their policies. They are essentially unelected officials, and I think they are also reminded about that fact, and rightly so. And so to maintain their mandate and their independence, it is important that they are held accountable and listen to concerns about their actions and being transparent about their actions. Otherwise, they would lose at some stage in time their legitimacy. That also means providing data, sharing the considerations that are relevant. On this transparency issue, incidentally, I should pay a compliment also to the National Bank of North Macedonia. The IMF, as you may know, has focused on this concept of accountability for some time, and it has issued a central bank transparency code as a key instrument in that context. And in 2022, North Macedonia was the first country to successfully complete a central bank transparency assessment. So it shows it can be done, it's important, and I think it was very good and appropriate that North Macedonia was the first country, the first central bank that underwent this process. And finally, I want to link it also to another concept I think that Boris mentioned a few minutes ago, which is communication. Communication is really key in this whole concept of independence and accountability and transparency. And that means that central banks should be able, and should also do so, should be able to explain their policies well, to guide the society through their considerations, and focusing on that communication I mentioned has only become more important, I think, with media becoming such an important factor, with the speed of news traveling so fast, with the impact of that news on financial sectors and on economic subjects being so important. So I think that is really something that central banks may wish to focus on. Not just communication to one part of the society, not just communication to the public. Also, it's important, I think, that central banks communicate well with the politicians. The point about populism was made, but it's very important also to explain and provide background to politicians about why central banks do what they do and what is their objective. But not only politicians, also the financial sector is important. It's been my experience as a central banker before that it's very important that central banks explain also to the financial sector what it is that they try to achieve and how they try to achieve it. Also to ensure that what they try to achieve, that the transmission of monetary policy is effective and that banks react the way they are supposed to react. And if that is not the case, then the policies may need to be altered somewhat because it is important that the effectiveness is maintained. With that, back to you. Thank you.
Thank you, Paul. Gilles, you mentioned in your earlier intervention societal independence. So what can central banks do to strengthen that?
Thank you, Hervé. I mean, starting with a remark that Paul made, of course, we are unelected officials. We are independent with big powers, so indeed we need to be accountable to the elected representatives of the country or the jurisdiction. I mean, independence is about the fact that you can act in line with your mandate. Accountability is the fact that you must act in line with your mandate. So the two, independence and accountability, are the two sides of the same coin. And to achieve accountability, I think we need transparency, explanation, and justification. So explanation is, for example, explaining your strategy. So ECB monetary policy strategy is about a hierarchy of objective, price stability, and without prejudice to this objective, supporting the economic policies of the Union. It's a clear symmetric point as regards inflation target. It's a medium-term approach, so discarding short-term deviation for output and inflation and concentrated on the long-term objective. So explaining your strategy is something I think very much important. Second, of course, is interaction with the Parliament. So in our case, with the European Parliament, so we have quite a fruitful and intense dialogue with the European Parliament in terms of regular hearings, regular replies to questions by members of the European Parliament. And also we have increased and enhanced this accountability framework beyond what the treaty required. So we decided to reply once a year to the recommendation made by the European Parliament in the annual report towards the ECB. So we reply to this recommendation. We have also made available to the Parliament the accounts of the monetary policy decisions, so they can have access to this account. We also publish a range of publication in terms of communication. This is a continuous effort, of course. You have also one-off things like a new project, new work streams that you have to explain. A good example is the digital euro. So this is a project which is a very ambitious project, a very sensitive project. You have people fundamentally for a digital euro, but people fundamentally against a digital euro, so you have to be very careful in your communication. So we explain regularly to the large public, but also to the parliament, what is the project. Again, the decision is not made yet. We need a decision and a legislation issued by the EU legislator. And when this legislation is adopted, then we can press the button and issue a digital euro. But before that, we really have to be accountable on this very sensitive topic. And the accountability, the success of this accountability, you can also judge it through surveys. So we have surveys at the European level, the Eurobarometer survey, which show the trust that citizens, the knowledge and the trust that citizens have in the central bank. And despite the fact that in the recent years, the main worry for citizens was inflation, at the same time, the trust in the ECB managed to stay at the high level, which is very comforting for us. As I said, it's a continuous effort. You cannot, let's say, relieve this effort for a while. There is a famous quote by Benjamin Franklin: "It takes many good deeds to build a good reputation, and only one bad one to lose it." So you have really to be consistent and not complacent. You have also to acknowledge your I would say, almost weaknesses. And we had issues with the errors we made in our forecasting. I think many institutions have problems in forecasting errors, but we had sometimes some blips in this respect. And President Lagarde in the Parliament explained how we built a forecast on the assumption we made and why we could make a mistake. And there is even an article in the Economic Bulletin of the European Central Bank on this forecasting error. So this is something that you should keep in mind also, is to be humble, modest, and explain sometimes the errors that you could make. I stop here.
Thank you, Gilles. So Paul, as someone who is outside the central banking circles, is that working?
So I think the first crucial point to make is that central bank independence remains more than ever necessary to achieve the primary price stability-oriented mandate. And as Boris has mentioned, the last episode of high inflation has been a clear testament to that. Now, the de facto expansion of central bank's mandate, which I've evoked earlier, is a trend, I believe, that will not be reverted anytime soon. And this creates, in my view, additional responsibilities on the part of central banks to enhance the trust they can generate from the public, to consolidate their accountability and reduce the contestation that their action can trigger. And I believe that this, two avenues to explore would be the following one. The first one would be greater responsiveness to the political branches and the direction they set. Anytime a central bank acts beyond its strict price stability mandate but relies on some forms of secondary mandate, I believe a closer coordination with the political branches and more receptiveness to their policy inputs would be warranted. For example, when it comes to the greening of monetary policy, I don't believe it's the role of a central bank to set its own environmental agenda. But in doing so, the central bank should take in the objectives set by the legislator, the standards established in legislation, and integrate these elements into its own policies. And I believe the ECB is doing so by integrating the green objectives set by the EU legislator, by relying on the EU taxonomy, but it is certainly an avenue to further explore. The second avenue is indeed greater transparency, greater communication, to make sure that any time a central bank has to make a choice, has to carry out balancing, has to anticipate certain effects, that this is reflected in the communication towards the public, so that the public can exactly understand what choices were made, what effects were factored in, and which kind of balancing was carried out. And this could be achieved by full transparency about central bank deliberations, so that these agreements and compromise can be fully open and fully visible to the public. And I'll stop here.
Thank you, Paul. So, Boris, how is the National Bank dealing with those issues in Croatia?
Well, I fully agree with what has been said, not much to add to that. Sorry. Fully agree with what has been said, not much to add to that. I think the key is we should never assume that anyone understands what we are doing. So we should just keep on explaining to anyone we can. For example, we invite the parliamentarian clubs regularly to the central bank, and they can set their own agenda, what they want to talk about, ask questions. We respond, of course, to any political queries that we get, try to talk to media as much as possible, have an outreach to the schools, like 3,000 students passed through the central bank last year. We have now opened a new center with the teaching room where we will bring more of them. So we're trying to do as much as possible in terms of the communication, which is of course very different from what central banks used to be before, when they were basically a kind of a relatively secret organizations who were surprising the markets and not explaining what they are doing. It's a very different world now. If you talk about the central banks, it's like a transparency, being digital, being green, being agile, data-driven. It's almost like talking about the corporate, you know? You have to be on the social media all the time. How effective it is, I think the jury is probably still out. There are a number of papers now been done trying to see how effective, for example, tweets are compared to the traditional means of communication of the central banks, and the results of those papers are inconclusive yet, but we cannot afford not to be there. We cannot afford to communicate, and we are doing it as much as possible. Of course, I would add there is one more thing very important for the credibility of the central bank, and that is not to make mistakes. If you make mistakes, anything you talk about will not help you, because mistakes will become apparent at some point, and if they are costly, that will hurt your credibility more than anything else. So it's still first do your job properly, and then explain what are you doing and why are you doing it to the public.
Thank you, Boris. So let's stay with you for the final question. And I think it has come up in the discussion that sometimes central banks find themselves in a difficult situation because of policies implemented by others. I mean, we've been talking about fiscal dominance, financial dominance. So it suggests that other authorities can play a role and make the life of central banks easier and reduce the criticism of the work of central banks. So how actively should the central bank communicate on issues that are not directly within its remit, but that do play a critical role in terms of its objective of price stability?
Yeah, that's a very good question, and it's always a sensitive issue. We discuss it often in the central bank, what we should comment on, and in what way and what not. Generally, I mean, the rule is that you can comment on the things that impact your mandate up to the extent that they do impact your mandate, without moving over that. But this is a blurred line, you know, it's very difficult to draw that line clearly, so you have to make your own decisions. For example, we do comment always on a fiscal stance, but we do not comment on particular tax fiscal policies, because this is something which is in the remit of the politics of the elected politicians, not of the central bank. We do, for example, comment on in Croatia, we were commenting very openly on the housing policies of the government, which is not directly something that is within the scope of responsibility, of course, of the central bank, but was having an impact on the prices in the real estate market, and we were critical about what has been done in terms of saying that subsidies typically, you know, it's economics 101. You subsidize this glass, price goes up. You subsidize this pen, price goes up. So you subsidize people purchasing the apartments, the prices will go up. So we were commenting on that. That was probably not liked by the government for some time. Now they have agreed with us and stopped that, and are doing now, I think, a very good thing for the housing market. So in a way, I mean, you have to be very selective. Where do you go? What do you comment on? If you step over the line, you always risk somebody telling you, okay, so now we can comment on what you are doing. Now we're going to step in your yard because you have stepped in our, and we're going to talk about your monetary policy. I would say it's more an art than a science to try to find the right balance on how you talk, what do you comment on. Of course, you also risk, if you start to comment too much, and we have seen that, on some issues, that the public perception then becomes that you can do something about it. So to be careful not to talk about the things very much that you cannot influence yourself, which are in somebody else's remit. So there are a number of risks, but you have to talk. You have to analyze things which are important for the economy. And sometimes you can do it through the blogs, which might not reflect the stance of the central bank. You know, somebody writes a blog from the research department and say that the views there do not necessarily reflect the position of the central bank. And that's how you do it. That's a useful way of doing it sometimes.
Thank you, Boris. And Gilles, final word for you. How is the ECB dealing with that in Frankfurt?
Well, I first have to recall, of course, the context in which we act. Contrary to a single state, we have a European framework where we have a single monetary policy, but we have 19 economic policies or fiscal policies. Of course, there is an institutional framework to sort of coordinate or have a disciplining framework for fiscal policies at the EU level. There is a surveillance framework on fiscal policies, somehow also on economic policies. So we are one actor, one monetary policy actor in front of 19 economic and fiscal actors. So the challenge, of course, is to communicate the right way to the EU authorities, to national authorities, at the same time in a subtle way. I would say, rebounding on what Boris said, we can comment on the economic policies in as much as they influence our mandate. So fiscal stance is a clear example on which we can comment, not individual fiscal measures, of course. Fiscal stance because it impacts the output, the inflation, and so on and so forth. Another example is climate. We do quite active policies on climate, but we always recall the main actor, the main lever to act against climate change in terms of economic implication is the fiscal policies, the governments. It's not the governments, it's not the central bank. So we always are very cautious in recalling this fact. The prime actor in this respect are the government. What we can do beside that is, of course, to have a lot of informal dialogue with governments regularly behind closed door, of course. We are also entrusted by the EU legislator to issue legal opinions on a draft EU provision or sometimes draft national legal text on central bank statutes, on financial sector regulation and so on. So we also play this role through the lenses of a legal analysis on draft legal provisions by the EU institutions or by national governments. So I would say these are the tools that we can use, and through other communications, speeches, blogs, etc. I mean, indirectly, of course, we can still try to comment on what other stakeholders are doing. But as I said, it's quite a sensitive and balancing act that we have to develop. Thank you.
Thank you very much, Gilles. We're now going to open the floor for a few questions. So I'm very mindful of the time. I see that it's already a few minutes past 11. But let's see if there are a couple of questions from the floor. So if you ask a question, please raise your hand, introduce yourselves, and keep your comment or questions short. And please also mention to which of the panelists you would like to address it. Okay, so it's a very quiet audience. Maybe it's the first session. Oh no, we have one here.
Okay. Irena Radovic, Central Bank of Montenegro, Governor. It was really a pleasure to listen to this vibrant discussion, and I would like to thank Boris in particular for highlighting the differences between advanced economies and in emerging economies in terms of status of the central bank and the undue political influence. Today, I'm one of the governors who's representing 9 EU accession candidates. And I've just returned from one of the leading EU economies where, again, there is undue political influence on central bank and the governor who well, there's a question mark for how long he will retain his position. But the question I wanted to pose, and I would like maybe Monsieur Noblet and Dermine to provide a reply, is whether you see the scope in collaborative effort between the ECB, the European Commission, and EU supervisory agencies in terms of making the central bank independence part of a stronger framework, broader rule of law commitment. Because the challenges that we are all facing and the fact that we all have the independence enshrined into our legal texts, but then again, ultimately the parliaments and governments deciding on the fate of central banks is not something that can, well, keep the independence, operational independence, and safeguarded to the extent that one would desire. And for Mr. Dermine, the case law, which already exists, and all the challenges that exist, do you think that there is a trend of potential, again, stronger case for safeguarding the central bank independence as part of rule of law commitment? Thank you.
Thank you. So which one of the two wants to go first? Gilles? Oh.
Okay. Thank you for the very good question. Of course, the independence of the central banks of countries aimed at joining the EU is some of big interest to the ECB. But there are two, let's say, two steps in the process. The accession to the EU first, and later the accession to the euro area. So if I come in sort of reverse order, accession for the euro area is based on convergence criteria, the economic convergence criteria, but also institutional convergence criteria. In that aspect, central bank independence is something that we screen. So when a country wants to join the euro area, there is a report by the Commission and by the ECB on whether these countries fulfill the convergence criteria. And on that aspect, we issue a report per countries on economic criteria and institutional criteria. And in that respect, we would screen carefully all the provision of the central bank independence status in your country. So that's something that we would do in a very formal and very detailed way. When it comes to the accession to the EU, which is the first step, a long-term process, we are not formally involved or publicly involved in this assessment, which is made by the Commission. Of course, we can always informally have a dialogue with the central banks of your country and commenting on the provision of your central bank law, etc. But of course, this would be informal and not public. So this is something we have done in the past. Sometimes some countries, even not related to EU accession, some countries send us a draft law of a central bank to have our view on whether these provisions are in line with, let's say, the basic principle of independence, or more precisely, for a country wanting to join the EU, whether it is in line with the EU provision on independence. So that's something we can do informally for countries on the way to EU accession. And then, of course, again, when it comes to euro area accession, then we have a much more formal role in that respect. Thank you.
Thanks a lot for your question. As you said, the principle of central bank independence is inherently linked with the broader constitutional principle of the rule of law, because which requires that any action of a public authority might be scrutinized by an independent judiciary. And from this perspective, strong independent central banks go hand in hand with strong independent judicial body, because you need an independent judiciary to review potential political action which might compromise central bank independence. And so you might have very strong legal texts. If you don't have the judiciary to enforce these texts and make sure that the political branches abide by the commitments towards central bank independence, it's worthless. And at least in the EU context, we've seen this very clearly with the Court of Justice of the European Union taking a very clear and a very protective stance towards central bank independence with very clear ruling enshrining a very high level of protection of central bank independence. The treaties also provide for certain very specific remedies enabling national central banks to challenge legislation which might compromise their independence directly towards the European Court of Justice. But so the two are indeed inherently linked, and very often we see independence protecting one another, judiciaries protecting central banks, and it's important that this dynamic is enabled and supported, hence the necessity and the centrality of the rule of law as an overarching constitutional principle.
Thank you, Paul. Any burning question to the panelists before we finish this session? No, I don't see any hands raised. So it's been a very rich discussion. I will not try to summarize it also in the interest of time, but I think there is a lot of convergence among the panelists with regard to what are the threats, but also what are the things that central banks can do actually to preserve central bank independence. And certainly something that everybody agrees is very important to the effectiveness of monetary policy. So let me thank the panelists for sharing their insights, and let's give them a round of applause.
Can I make one final point?
Dear
Sorry
guests,
to.
please join us
We're
at
talking
the coffee break
We're talking
in the
about
lobby.
accountability, and I think one way to establish accountability is also to put a number of central bankers in front of an audience and let them explain why central bank independence is so important. So we're actually doing the work also ourselves. Thank you.
Dear guests, please join us at the coffee break in the lobby. Ladies and gentlemen, dear guests, it is time for the second panel, Central Banks' Mandates and Policy Trade-offs. We kindly invite the moderator and the panelists to take their seats.
Dear guests, we continue with the second panel, and beforehand we will hear the keynote speech by José Manuel Campa, who is the chairperson of the European Banking Authority. Mr. Campa has a distinguished career in academia, from where I'm coming, and now head of this super important European institution, the EBA. Previously, he also had private sector experience at Santander Bank, and I think that will be one of the interesting addition of our panel to draw on skills both from experiences and deep knowledge of academia, of the public sector, but also private sector experiences. Mr. Campa, without further ado, the floor is yours.
Good morning, everybody, governors, ladies and gentlemen. Thank you for inviting me, and it's a real pleasure to speak here at this conference organized by the National Bank of the Republic of Northern Macedonia and the Reinventing Bretton Woods Committee, especially now that we're in the 80th anniversary of the Bretton Woods Conference. I would like to start by an initial obvious reflection. The last 80 years have not been bad overall for economic growth and financial stability around the world, I would say. Having performed well worldwide in the last 80 years, of course, cannot lead us into complacency. On the contrary, we know we have important challenges ahead, and for the EU in particular, those challenges may be daunting. Just to highlight this, allow me to quote from the recent published Draghi report on the reforms that the EU needs. The report says, to digitalize and decarbonize the economy and increase our defense capacity, the investment share in Europe will have to rise by around 5 percentage points of GDP to levels last seen in the 1960s and 70s. This is unprecedented. For comparison, the additional investment provided by the Marshall Plan between 1949 and 51 accounted to only 1 to 2% of GDP annually. This is probably the most famous quote out of that report. Needless to say, the reference to the 50s or the 70s in Europe is not random. That was the so-called golden age of the Western world, with very high ratios of investments and rapid diffusion of US technologies across Europe. Now, to raise investment at such a massive scale and rapid speed, Europe will require to coordinate efforts. Funding needs to come from a mixture of public money, public-private partnerships, and we will discuss on the panel the role that central banks can play also in these challenges. Let me focus my remarks on the narrow role that financial regulation, and in particular prudential regulation, can play to enhance the mandates. A strong prudential regulation, I think, is a necessary condition for intrusive and effective bank supervision, a key mandate for many central banks, as was discussed in the earlier panel. Now, allocating savings and private financing in an efficient way will be essential to facilitate the transition. European banks, acting as intermediaries, will have a crucial role to play in pulling together funds and thereby supporting the financial needs of the economy. As we embark on that journey, it's crucial to ensure that our banks remain resilient. This is where the European Banking Authority steps in. As the European regulator, the EBA's role is to ensure that we have a robust regulatory framework in place that can withstand times of crisis. Now, to understand the necessity of a strong regulatory framework, we must first reflect on our recent history. The global financial crisis of 2007-2008 revealed serious weaknesses in our financial system, vulnerabilities which were detrimental for economic activity and growth, and finally for welfare. More than 10 years later, we face the COVID-19 pandemic, a crisis of an entirely different nature, but no less impactful. Economic activity also slowed down sharply, global trade was severely disrupted, and labor markets were massively hit as restrictive measures were taken to contain the virus. While this cannot be considered as a comprehensive test of banks' resilience, the experience of the COVID-19 was significantly different from that of the global financial crisis. It is true that the magnitude of public support provided during the COVID crisis was important, but nonetheless, I think it was reassuring to see that the banking sector was this time part of the solution to the problem rather than part of the problem. A similar observation can be made with recent challenges following the Russian invasion of the Ukraine, which triggered wider geopolitical tensions, driving up energy prices and intensifying inflationary pressures across the globe. Despite all these recent shocks, EU banks have shown remarkable resilience and experienced limited direct impact. The natural question is therefore, what has changed in between the two periods, the global financial crisis and these two most recent banks? Banks have learned from their past mistakes for sure. Governance and risk management has improved. Regulators have also learned, and the revision of the prudential framework that occurred in the years following the global financial crisis has helped build a more robust system. Over the years, we have adopted a series of regulatory reforms to improve bank solvency, liquidity, governance and risk management, and resolvability, and that has boosted the resilience of banks to economic shocks. According to our latest analysis, the capital and liquidity positions of EU banks remain very strong. The Core Equity Tier 1 ratio stood at 16%, the highest in the global financial crisis, comfortably obviously above regulatory requirements, but also liquidity coverage ratios were very high at 160.9% for the liquidity coverage ratio. Now, while financial stability is a precursor for stability and economic growth, financial stability is not the only objective for regulation in the financial sector. Banks are structurally leveraged institutions, and while a too high level of leverage may end up with the banks not having enough capital to weather downturns and to cover potential losses, requiring too much capital is also costly and may result in a higher cost of financing for the economy and also hampering future investment. It is clear that setting up the correct level of capital requirements is not an easy task and should hence be approached with humility. There are, however, various elements that make me think that the enhanced regulatory framework has helped us to achieve a more appropriate level, and let me point to three of those evidence. First, a robust regulatory framework provides net benefits beyond the mere absorption of shocks and losses by equity holders. It strengthens the governance and the measurement of risk by banks, which allows them to be better equipped to take good credit decisions and adequately manage risks. In addition, it also ensures trust in the solidity of all the actors in the financial sector, smoothing transactions and capital flows across the globe. Second, I will note that there is no evidence that the cost of regulation has led to credit being rationed. Quite the contrary, academic evidence shows that credit supply flows well when banks are strong. For instance, when looking at the cost of borrowing for households and corporates across the European Union, we even see a reduction of the spreads relative to central bank rates in recent years. Furthermore, evidence suggests the regulatory relief for specific portfolios does not encourage further lending from healthy banks. For example, this observation is corroborated by us by the EBA work on various attempts to boost the lending in some EU-specific sectors via lowering their own fund requirements by banks. I'm referring here to the what's so-called SME and infrastructure supporting factors in EU regulation, where in both cases we have done work at the EBA and did not find evidence that the reduction of own fund requirements was met with an increase in lending by banks. Third, the macroeconomic impact assessments performed by us at the EBA, but also by the ECB and other central banks and international institutions, showed that the Basel III regulatory framework reforms have only short-term economic costs, which are far outweighed by the long-run benefits coming from a reduction in the frequency and severity of financial crises. The EU, we have recently finalized our banking package legislation in light of the implementation of the final Basel III rules. As always, this was a very lengthy process, as building the needed political consensus and the trialogues are by no means an easy task, but it is worth highlighting that we have delivered on that and we're ready to go. The movement towards the implementation of the Basel III framework in a harmonized manner across jurisdictions is paramount for ensuring global financial stability and fostering a level playing field within the banking sector. It's very good in that context that many jurisdictions across the world, part of the FSB, have implemented the Basel standards already. I'm also pleased to see that the UK implementation is going forward with an implementation by January 2026 in a manner largely aligned with the final Basel III framework. I am, however, more concerned with the implementation delays in the US, with some significant uncertainties still in their timing and the specificities of their implementation. A common regulatory framework is even more important in the area of market risk, given the global nature of the trading business in the banks. In this vein, the European Commission has adopted a delegated act to postpone the fundamental review of the trading book implementation in the EU by 1 year to January 26, to make it more aligned with our Western counterparts. Finally, I'm also very pleased by the efforts of other European jurisdictions beyond the EU, and in particular in this region, to adjust the regulatory framework so as to make it equivalent to the EU rules and the progress that has been done in this area. Equivalence in regulatory frameworks will allow us to deeper integrate the financial markets across Europe and to benefit from open financial markets and better risk sharing in this region. The EBA will continue to support this process with our mandate to assess the equivalence regimes of these third country jurisdictions. Let me conclude. Over the past decade, the world, and Europe in particular, has been a strong and robust regulatory and supervisory framework. This is essential for promoting EU's competitiveness. However, it's also important to recognize that to truly advance, we must focus on making the single market in Europe deeper and more integrated by finalizing the well-known banking union and also deepening capital markets. In conclusion, a robust regulatory framework is an essential tool, I believe, for financial stability, to facilitate the allocation of savings and to support the investment needs of our future. Thank you for your attention.
Thank you very much, Mr. Campa. And let me now introduce the panel proper. In addition to Mr. Campa, whom I have introduced, let me then highlight the panel participants. Let me start with myself. My name is Piroska Nagy-Mohácsi. I am a professor at the London School of Economics. And we have a distinguished panel. I go in this order, so you can easily follow, and then during the discussion we mix and match, so to speak. So next to my left, to your right, is Jean Pem. He is the Global Director of Finance, Competition and Innovation at the World Bank, where he has had a distinguished career covering a number of important issues on financial stability, resilience, and overall looking at financial system, financial stability, integration in the whole world, but focusing perhaps on developing and emerging markets. Then I skip our keynote speaker, and let me go to Governor Boštjan Vazle, who is the governor of Bank of Slovenia. He took up this position in September 2018 after having worked already in the bank for some kind. He was director of IMAD beforehand and until he took up this important position in 2018. I also note an interesting Central European connection that you had some of your graduate education at the Central European University of Budapest, my birthplace, when it was still there. Then we continue with Governor Gent Senko of the Bank of Albania, who was appointed and then as governor in February 2015, and then since then reappointed for a second term in 2020.